What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is ENDP, Endo International. This finishes at 60 cents today. That is up 13.07%. So we analyzed this stock last week. This stock and a bunch of other contraceptive stocks did start short squeezing due to the overturning of Roe v. Wade. So I did say last week when we analyzed this that it was probably coming back down to 40 cents to fill the gap before it goes back to the upside. And it did in fact fill the gap there. Throughout the whole week, the momentum has been pretty strong. It didn't have massive price action, but this is still low-key short squeezing, little by little, every single day. This did make top 10 on StockTwits today. Had about 3,000 mentions. So once again, we're going to analyze it. So no company-specific news to justify this price action today. Again, just seems like retail momentum still strong. Apes not giving up, not selling, diamond handing. They just keep buying and shorts covering. So let's jump right in. Let's go ahead and analyze here. So first of all, we have a cup and handle in the making. Bottom of the cup being the low of 28 cents. And there can be multiple possible tops. It can be 125, 150, 220. Or 275, and longer term, this is part of an even bigger cup and handle, where this has the potential to go back up to $7 or even the high of $11. So those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. And then we do have a double gap down. First gap down is back at $3, so that is a bullish indicator. That is telling us that the stock should come back up to $3 to fill this gap. And second gap down is back at $2. So another bullish indicator. That is telling us that the stock should come back up to $2 to fill this gap. And it'll probably take a while for those gaps to fill, but eventually they should. So double gap down, bullish indicators. In the aftermarket here, this is running to the upside. This is now at 61 cents. So if this aftermarket action holds, that would be a bullish indicator for Monday. That is suggesting that this stock will continue to run on Monday as well. And here we have a symmetrical triangle forming. So right now this is consolidating between 66 and 52. So there is still a bit more consolidation to go, but this should consolidate somewhere around 59 cents. And from there, it's going to break out very significantly either to the upside or the downside. So the symmetrical triangle is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is trading between the sideways channel, the rectangle of 62 cents and 55 cents. So if this goes to the upside, next levels of resistance would be 62 cents, 71 cents, 82 cents, 105, 110, 115, 120, 125, 135, 145, 150, 190, $2, and then 205. There is resistance above 205, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 55 cents, 48 cents, 40 cents, 30 cents, and then the low of 28 cents. So right now at the current price, 60 cents, the channels to the upside and the downside are pretty wide. So expect significant price action either way this goes. However, when this breaks 105 to the upside, the channel starts to narrow. So expect a significant decrease in price action when this breaks 105 to the upside. And to the downside, when this breaks 34 cents, the channel starts to narrow. So expect a significant decrease in price action when this breaks 34 cents to the downside. RSI is currently at 52. That is pretty average, a little bit above average there. So according to the RSI, the current price of 60 cents should be a little bit lower, but pretty fair market price here at 60 cents. And this did 126 million in volume today. Very significant volume, way above the average of 11.5 million. So this pump slash squeeze today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So the stock appears to be pretty bullish in the short and long terms. Again, we have strong bullish indicators in the cup and handle and double gap down. Last week, my only concern was the gap up at 40 cents, and that filled. So now we really only have bullish indicators, no bearish indicators, and we have neutral indicators in the RSI and symmetrical triangle. So therefore, if you want to go long, not financial advice, the current price of 60 cents is a pretty decent entry. It's not the greatest entry, but it's not a terrible entry. Very average entry here, according to the RSI. So you can't go too wrong here, but just be aware this may pull back. You really shouldn't go too much lower to the downside though. So again, there is a gap down at $3, so this should eventually come back up to $3 to fill the gap. And from the current price of 60 cents, that would be a 400% upside potential. So a huge upside potential here in the long term, and it actually can run up much further than $3. $3 should be the very minimum. And again, really shouldn't go too much lower to the downside here. So I would say going long at the current price, 60 cents would be a low risk, very high reward play. Definitely worth a shot. excellent play here, especially if you're willing to hold for the long term. So I can support going long at the current price, 60 cents. And if it pulls back, then you can just average down at the supports that I mentioned before. But yeah, you really can't go too wrong here. A lot of upside potential, not much downside potential. And it's still squeezing. Now, if you want to go short now, financial advice, I would not do that, and I would not recommend that. For the same reasons I said to go long. Very strong bullish indicators at the moment in the short and long terms. Still in the middle of a short squeeze. No bearish indicators. Huge upside potential, and not much downside potential. So I would say going short here would be a very high risk, low reward play. Just doesn't make too much sense here, going short. So maybe in the future, after the squeeze is over, you can come in and short this down. But at the current price, 60 cents, I don't see why you would go short here. There's not too much money to be made on the downside, and huge upside potential, so good chance you get squeezed out. So if you want to go short, please do that at your own risk. But there's really no reason to go short here. Seems like a pretty bad idea. Alright, so pretty straightforward, guys. The contraceptive squeeze is still on. Still very strong retail momentum. And the chart does look pretty bullish in the short and long terms. So if you want to go long, the current price, 60 cents, is a very average entry. Can't go too wrong here. 400% upside potential. So I can't support going long here. And if it pulls back, then you can just average down at the supports that I mentioned before. And if you want to go short, I really don't see a reason why you would do that. Probably going to get burned. So if you want to short this, go ahead, do it at your own risk. But it seems like a pretty bad idea to me. So congratulations to everyone who made money in the stock today. And good luck to everyone currently in the stock and to everyone looking to take a position. This is ENDP, Endo International. Thanks everyone for watching today. I appreciate you guys. Please, like the video. Please subscribe. And catch me every weekday after market close on the Smarter Gambling Show. You apes already know. Diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys on Monday. Have a great weekend, everybody. Peace out.